Hello and welcome back to TechDaily.ai. I'm your host, David.
And I'm Sophia.
Before we get into it today, just a quick message for everyone listening. You can sponsor this show for just $25.
Yep, just $25.
Your message will get featured across all the major platforms. Apple Podcasts, Amazon Music, Spotify, you name it. If you're interested, just visit TechDaily.ai to get started today.
It's a great way to get your message out there, honestly.
Absolutely. And speaking of things that involve huge amounts of money, I want to start with a visual that's been stuck in my head all morning.
Okay, I'm intrigued.
It's a metaphor, of course,
Yep.
but with the news we're looking at today, it feels almost, painfully real.
All right, lay it on me. Set the scene.
Okay, picture this. Jensen Huang, the CEO of NVIDIA, he's walking towards Sam Altman from OpenAI, and Jensen is dragging these two, giant cartoon sacks of money. Coins are spilling out, clinking everywhere. He gets right up to Sam, holds them out. Sam is smiling, reaching for them. And then at the last possible second, Jensen just shouts, "Psych!" and snatches them back.
Oh, wow. That's a vivid image.
Right.
A little cruel, maybe, but you know what? It's not actually that far off from the reality of what just happened.
It sounds like a comedy sketch, but we're talking about a historic reversal. So let's unpack this. What actually went down on Friday?
Well, if we get rid of the metaphor, as of Friday, January 30th, 2026, NVIDIA has officially put a massive $100 billion deal with OpenAI on ice.
$100 billion. That's a staggering amount of money to just freeze.
It is.
I mean, that's the GDP of a mid-sized country just sort of hanging in the balance.
And this isn't just a delayed contract. It's not a supply chain hiccup. This is a massive signal flare. We've been talking about the AI gold rush for years now.
Oh, every single day. It feels like it's been the only story in tech for the last 3 years.
Exactly. So what happens when the company that sells the shovels, NVIDIA, decides that the biggest digger in the field, OpenAI, isn't worth betting on anymore?
The shovel provider loses faith in the whole gold mine.
That's it.
That is actually terrifying when you put it like that, because if the guy selling picks and shovels packs up and leaves, he usually knows there's nothing left in the ground.
Right.
So let's get into the specifics here. What was this $100 billion actually for? It wasn't just cash, was it?
No, not a direct cash injection. The deal was for hardware and resources. We're talking about $100 billion worth of GPUs, the heavy-duty chips needed to run these huge language models.
So the raw computing power. The engine.
Precisely. This was supposed to be OpenAI's war chest. This was the hardware they needed to absolutely crush their competitors like Anthropic or Google's Gemini. It was their game-over move.
A moat so wide nobody could ever get across.
Yeah, the idea was to build a compute cluster so big that no one could possibly catch up.
And now that move is on hold. You mentioned the timing Friday, January 30th. That feels very intentional.
Oh, it's absolutely strategic. The news broke hours after the markets closed for the week. It's a classic Friday news dump.
Right, the old drop the bad news when everyone's checked out for the weekend trick.
Exactly that. You release it after the market closes. So investors have all weekend to panic, calm down, and hopefully not trigger a catastrophic sell-off first thing Monday morning. It lets the shock settle.
It's Crisis Management 101.
It really is.
Now, let's talk about the phrasing. The reports all use the phrase "on ice." That sounds so temporary, doesn't it? We're just popping this in the freezer for a bit.
It does sound temporary, and that's on purpose. This is where you have to learn to speak investor.
Okay, translate for us. What does "on ice" really mean in a boardroom?
When a deal of this size is put on ice, it almost always means the deal is dead. But they can't say dead. Because if NVIDIA came out and said, "We're canceling this because we don't trust OpenAI's business," NVIDIA's stock would crash. OpenAI's valuation would crater. So on ice is the polite way of saying, this is over, but please don't sell all your stock just yet.
A soft breakup. It's not you, it's the market conditions.
Right, but we all know it is them. It's definitely them.
So why? What's the real reason Jensen Huang pulled the plug? I'm hearing whispers about NVIDIA's lawyers getting tricky.
Well, tricky is one word for it. Let's say diligent. It turns out NVIDIA's legal team put a lot of what are called weasel words into the original agreement.
Weasel words. I love that. What does that mean in a contract this big?
It means non-binding clauses, escape hatches, conditions that are almost impossible to actually meet. It turns a solid contract into more of a maybe agreement.
Okay, and now Jensen Huang is using those escape hatches.
It is, and he's reportedly citing OpenAI's lack of discipline in their business approach as the reason.
Ouch. Lack of discipline. That sounds incredibly personal.
It's a very harsh thing for a partner to say. But you have to think about the power dynamic. NVIDIA is the house in this casino. They run the infrastructure, they see the usage rates, the energy bills, everything.
They know who's winning and who's losing.
Exactly. So when the house gets nervous and pulls chips away from the biggest player at the table, it means the house knows something is very wrong with the game.
That's a chilling thought. And this lack of discipline, it feels like it points to the product itself, right? We've seen some stagnation there.
That's the other big part of this. It's not just the money, it's the tech. I mean, since GPT-5 came out, OpenAI's lead has really it's fallen off a cliff.
Yeah, I remember GPT-4 felt like magic, like a true leap forward. GPT-5 felt incremental. Better, yes, but not revolutionary.
And if you're not revolutionizing, you're stagnating. While OpenAI was making small gains, competitors like Google's Gemini 3 Pro and Anthropic's Opus 4.5 have pretty much caught up, or in some cases surpassed them.
So the general feeling is that they're just
dressing up last year's model, is the phrase you hear a lot.
Like putting a new spoiler on an old car and calling it the new model.
Pretty much. And for a company valued this high, that's just not good enough to justify a $100 billion hardware investment. You need exponential improvement to justify that kind of exponential spending.
Which brings us to the money, because these numbers are, wow, there are some leaked documents that paint a really grim picture of their finances.
Grim is putting it mildly. The documents show OpenAI is projecting a loss of $14 billion in 2026.
$14 billion with a B.
With a B. And to give you some context, that's 3 times worse than their estimates for 2025. The losses are getting bigger, not smaller.
So as they get bigger, they're burning cash even faster. That's the opposite of how it's supposed to work.
Right. And if you look at the cumulative losses projected between 2023 and 2028, it's expected to hit $44 billion.
$44 billion in losses. I mean, I get that tech companies burn cash to grow. Amazon did it for years, but this feels different.
It is different. And despite all this, they've been trying to raise money at a valuation of $830 billion.
Okay, stop. That sounds completely insane.
Yeah.
An $830 billion valuation for a company that has never made a profit and is losing $14 billion a year. The math just doesn't work.
It doesn't. Their current revenue is about $13 billion. To just break even, they'd need to grow their revenue 8 times over in the next 4 years.
8 times. For a company that big, that's almost impossible.
Yeah.
Growth slows down as you get bigger. It doesn't accelerate like that.
And that's assuming their costs stay the same, which they won't. You mentioned that lack of discipline quote earlier. This is it. They're paying engineers million-dollar compensation packages.
Yeah, I've heard those rumors.
Look, top talent is expensive, I get it. But when you are hemorrhaging money, you can't be paying lavish salaries while your product is falling behind. Some analysts are now saying that without another huge cash injection, OpenAI could actually face bankruptcy by 2027.
Bankruptcy. Wow. The darling of the AI world. But surely all this spending must be creating some value somewhere. I mean, people are using AI.
Oh, people are definitely using it. But are companies making money from it? That's the real question. And there was a recent MIT study that found something pretty shocking.
What's that?
95% of enterprise AI projects are generating 0 return on investment.
0, not low return.
0. Companies are building these projects, doing tests, and it's having no impact on their bottom line. It's often just productivity theater. It looks impressive, but it doesn't translate to profit.
That's a damning statistic. So we have big tech spending billions on infrastructure for projects that return nothing.
And the scale of that spending, it's mind-boggling. The big hyperscalers, Microsoft, Meta, Google, they're spending over $500 billion on AI infrastructure this year.
$500 billion. I can't even visualize that.
Okay, try this. That's more than the entire GDP of Singapore.
Whoa.
We are spending the entire economic output of a wealthy nation on a gamble. And Goldman Sachs predicts that number will go up to $527 billion next year.
So we're spending Singapore's GDP every year on tech that, for most companies, does nothing.
Yes. And this gets to what some critics call the circular funding problem. It's a bit Ponzi-like, really.
How does that work? Walk me through the circle.
Okay, so NVIDIA invests in a company like OpenAI. They give them cash.
Right.
OpenAI then takes that money and uses it to buy NVIDIA chips.
So the money goes right back where it came from.
Exactly. NVIDIA books it as revenue, their stock goes up. OpenAI books the chips as assets. It looks like a healthy, growing ecosystem. but the actual end-user demand just isn't there to support it. It's money moving in a circle to inflate everyone's valuation.
An engine running on its own exhaust fumes.
Until the fuel runs out, which it always does.
And this has happened before, right? This feels a lot like the dot-com boom.
Oh, history's absolutely rhyming here. In the late 90s, companies like Global Crossing spent about $500 billion, almost the same number, ironically, on fiber optic infrastructure.
Laying all those cables into the ocean?
Yeah. They were betting on a huge explosion in internet traffic that just didn't exist yet. They built a 10-lane highway for like 3 cars.
And they all went bankrupt.
They all went bankrupt. The infrastructure was useful. Eventually, we're still using those cables. But the companies that paid to build it got wiped out.
So OpenAI could be the global crossing of our time. They buy the chips, build the data centers, go bust, and then someone else picks up the hardware for pennies on the dollar.
It is a very real and very scary possibility. And this is what people mean when they talk about an AI winter.
Winter is coming, but for tech.
It's a term that's been around for decades. AI has had these crashes before, in 1974 and 1987. The pattern is always the same. Massive hype, then irrational spending, and then a brutal reality check.
And the NVIDIA news feels like the beginning of that reality check.
I think so. The funding gets cut, and then research it goes into stasis.
So what does an AI winter look like today? Does my ChatGPT just shut down one morning?
No, not at all. The tools we have now will stick around. They're useful for coding, for design, all that stuff. The winter means the investment stops. The frantic research pace slows to a crawl. The dream of AGI solving all our problems next year, that dream gets put on ice, so to speak.
So the hype dies, but the basic tools remain. But the economic fallout from that sounds messy.
It could be a huge domino effect. Think about all the venture capital that's tied up in these AI plays right now. If the bubble bursts, that capital just vanishes.
So if you're a biotech startup,
Yeah.
You can't get funding because all the investors just lost their shirts on AI.
That's the fear. It creates a liquidity crisis for everyone. And then you have the public markets, the S&P 500.
Right.
We are at a point where the top 5 companies make up 30% of the entire index. It's the highest concentration in 50 years. And they are all massively invested in AI.
So if the AI bubble pops, it's not just a tech problem. It drags the whole market down.
That's the risk. If NVIDIA and Microsoft take a huge hit because this AI revenue turns out to be a mirage, your 401k takes a hit too. You can't really diversify away from it.
That's sobering. So who makes it through this? Do the big players die?
The giants, your Googles and Metas, they'll survive. They have other businesses. Google still has search. Meta has its ad network. They'll take haircuts. Their stock will drop. There will be massive layoffs, but they won't disappear.
But the pure play AI companies.
That's the extinction event. Companies like OpenAI or the thousands of little startups that are just a thin wrapper around GPT-4. If the funding goes, they have no other revenue. They're gone.
It's a brutal outlook. But listening to all this, it almost feels necessary. We can't keep spending the GDP of a country on something that returns zero value forever.
No, you can't. Markets are rational in the long run. The bubble isn't coming. It's here. We are in it right now.
And the NVIDIA news. That was the first big domino to fall.
It's the sound of the music stopping, and everyone is scrambling for a chair.
Well, on that cheerful note, let's wrap this up. It's fascinating and a little scary to see history playing out in real time.
It really is. But it's better to be aware of the cycle than to be caught by surprise.
For sure. So here's the thought I want to leave you with today. We started with Jensen Huang and those bags of money. If NVIDIA, the company selling the shovels, just decided that digging for gold isn't a viable business anymore, what does that tell you about the gold itself?
That is the multi-billion-dollar question, isn't it?
Thanks for tuning in to TechDaily.ai. We'll be keeping a very close eye on this.
Stay curious, everyone, and stay critical.
We'll see you next time.